Did Jews cause the 2008 financial crisis? If they did, this should be the easiest thing in the world to demonstrate. The crash is one of the most documented events in modern history. There were congressional hearings, a federal inquiry commission, criminal investigations, and thousands of pages of internal emails released under subpoena. Every major firm's leadership is a matter of public record, so we can simply look. The short answer is no. The 2008 crash was caused by a chain of decisions made by thousands of people across mortgage companies, investment banks, insurers, rating agencies, and regulators. Some of those people were Jewish, most were not. And the single firm most associated with Jewish founding was not the winner of that crisis. It was destroyed by it. Let us start with what actually happened, because most people who repeat this claim cannot describe the mechanism. The crash began with mortgages. Through the early 2000s, American lenders began writing home loans to people who could not repay them. Loans with no income verification. Loans with adjustable rates that started low and jumped later. Loans where the borrower could skip payments entirely and add the missed amount to the debt. These were sold aggressively because the person writing the loan earned a commission and then sold the loan onward. The risk left the building within days. Nobody who approved the mortgage was still holding it when it failed. Those mortgages were then bundled together by the thousand into securities and sold to investors around the world. The rating agencies, Moody's, Standard & Poor's, and Fitch, stamped many of these bundles with the highest possible safety rating. Investors trusted the rating. Insurance companies wrote contracts promising to cover the losses if the bundles failed, and collected the premiums without setting aside enough money to pay out. Every part of this depended on one assumption: that American house prices would keep rising. When they stopped, the entire structure came apart at once. Now the names. Who were the central figures? The largest mortgage lender in the United States was Countrywide Financial. Its co-founder and chief executive was Angelo Mozilo, the son of a butcher, the grandson of Italian immigrants born in the Bronx. Countrywide pioneered the exotic products at the heart of the crisis. In private emails later obtained by the Securities and Exchange Commission, Mozilo described his own company's subprime loans as toxic and as the most dangerous product in existence, while publicly insisting credit quality was not a concern. He eventually paid over $67 million to settle federal charges. Countrywide was sold to Bank of America in a fire sale. IndyMac, which Countrywide had started and spun off, collapsed and was seized by regulators. Washington Mutual became the largest bank failure in American history. New Century Financial, one of the biggest subprime originators in the country, went bankrupt. American International Group, the insurer whose financial products division wrote the credit default swaps that spread the damage worldwide, was run in that division by Joseph Cassano. Merrill Lynch, which loaded itself with mortgage securities, was led by Stan O'Neill. None of these people are Jewish. All of them are central to what happened. Now take the strongest version of the claim, because a real answer has to face it rather than avoid it. Lehman Brothers was founded in Alabama in the 1840s by three Jewish immigrant brothers from Bavaria. Its chief executive in 2008, Richard Fuld, was Jewish. On the 15th of September 2008, Lehman Brothers filed for the largest bankruptcy in American history. The firm ceased to exist. Its shareholders were wiped out. Its employees lost their jobs, and for many, their savings, because much of their compensation had been in company stock. Fuld's own holdings, worth hundreds of millions on paper, went to nothing. Bear Stearns, another firm with prominent Jewish leadership, was gone 6 months earlier, sold in an emergency deal for a fraction of what it had been worth. Think about what the conspiracy requires. It requires that a group orchestrated the crisis for its own benefit. and yet the two firms it most often names are the two that died. If this was a scheme, it was the worst executed scheme in financial history because the alleged schemers destroyed themselves first. Then there is Goldman Sachs. Founded by Marcus Goldman and Samuel Sachs, both Jewish, its chief executive in 2008, Lloyd Blankfein, was Jewish. Goldman survived, and it made money betting against the mortgage market while selling mortgage products to clients. This is the fact the conspiracy leans on hardest, and it deserves a straight answer. Goldman's behavior in that period was investigated, condemned in a Senate report, and resulted in a $550 million settlement with the SEC. That is a real finding about a real firm, and criticizing it is legitimate. But notice what the conspiracy does with it. Goldman is treated as evidence about Jews. J.P. Morgan Chase also survived the crisis and also came out stronger, buying Bear Stearns and Washington Mutual at distressed prices. Its chief executive, Jamie Dimon, is of Greek heritage. Wells Fargo survived and absorbed Wachovia. Nobody presents Dimon as proof of a Greek conspiracy. He is just a banker who did well. That is the double standard at the center of this. When a Jewish executive is destroyed by the crash, he is treated as an individual who failed. When a Jewish executive survives it, he is treated as evidence about an entire people. The same fact pattern produces two different conclusions, depending only on whether it supports the story. The same logic gets applied to the Federal Reserve. Alan Greenspan chaired the Fed during the years the bubble inflated, and Ben Bernanke chaired it when it burst. Both are Jewish, and this is offered as proof. But Greenspan and Bernanke disagreed with each other on substantial questions, and Greenspan's low interest rate policy and light regulatory touch have been criticized for 2 decades by economists across the political spectrum on the merits. Bernanke's response to the crisis, the emergency lending and the bond buying, is likewise argued about endlessly. If two men who publicly disagreed about the causes and the cure were both part of one plan, the plan has no content. Bernie Madoff is often folded into this too, so let us deal with it. Madoff ran the largest Ponzi scheme ever uncovered, and it collapsed in December 2008. He was Jewish, and this is presented as confirmation. But Madoff's scheme had nothing to do with mortgages or the banking crash. And look at who he stole from. His victims were overwhelmingly Jewish. Jewish families, Jewish charities, Jewish schools and foundations, institutions that lost everything and closed. He used his position inside a community to rob that community. The idea that this demonstrates Jewish solidarity in finance survives about 10 seconds of contact with the victim list. So why does this myth attach itself to 2008 in particular? Because the crisis was genuinely enraging and nobody was punished for it. Millions of people lost homes. Retirement accounts were cut in half. Businesses closed. And almost no senior executive went to prison. That is a real grievance, and it is not a conspiracy theory. It is a documented failure of accountability that people across the entire political spectrum are still angry about. When people are that angry and the system gives them no target, an old story is waiting with one already prepared. It is the same story we traced before, the one built over centuries out of medieval lending restrictions, an inflated Rothschild legend, and a forged document. Every generation has a crisis, and the myth simply attaches itself to whichever crisis is current. The names change, the claim never does. And that is the tell. A genuine explanation of 2008 would have to be specific to 2008. It would have to talk about pay option adjustable rate mortgages and rating agency conflicts of interest and the repeal of leverage limits and credit default swaps sold without reserves. This explanation talks about none of that. It could be pasted onto the crash of 1929 or the panic of 1873 or the Black Death, And in fact, it was. That is not analysis. That is a template. The real story of 2008 is worse than the conspiracy, not better. A conspiracy would mean somebody was in control. What actually happened is that thousands of people, in dozens of institutions, each made a decision that was rational for them individually and catastrophic for everyone collectively. And the system had no one in it whose job was to notice. There was no room where it was planned. That is the frightening part. So the next time someone tells you Jews caused the 2008 crash, ask the same three questions. Which firm specifically? Who ran it? And what did they actually do? And what evidence connects those individuals to Jewish people as one organized group rather than as individuals who happen to be Jewish? Then hand them the list. Countrywide, IndyMac, New Century, Washington Mutual, AIG, Merrill Lynch, Moody's. And ask them why the two firms their story names loudest are the two that no longer exist. Once the rumor is replaced with the record, the secret plan disappears. What remains is a system that failed in public, in daylight, with the paperwork all still on file.